Welcome back to my channel, ladies and gentlemen. I am so happy to welcome you once again to my channel. So in today's video, I am going to be showing you a strategy that I formulated using support and resistance level alongside with the Fibonacci retracement. I used this strategy and generated over $2,000 in less than 2 hours. This strategy is very important if you truly want to make money in the forex market. So my advice to you guys is to watch this video from the beginning to the end. Don't skip any. Watch the video from the beginning to the end and you will understand this strategy very well. My name is Austin Ikeru and you all are welcome to my channel, Ostino FS. So now let's talk about the Fibonacci retracement. The Fibonacci retracement is a tool that so many forex traders use to make money in the forex market. So if you know how to implement this tool, you will be able to make money consistently from the forex market. Some traders use only the Fibonacci retracement to make money, but some combine it with normal support and resistance level, because combining the Fibonacci retracement with your support and resistance level gives you a confidence, higher probability of the trade going in your direction. So that is why whenever you are trading the forex market, you need to have so many confidence for you to be able to have confidence in yourself, because forex trading is all about confidence. If you have confidence in yourself, you believe in your setup, there will be no panicking. And as long as you are using the right position size of your trade, you are using the right money to trade, you are not over leveraging yourself, right? You are using at least 1% or 2% of your entire capital to trade. You will trade with confidence without any panic. You just trade based on your analysis without trading based on reactions or emotions, right? So that is why it's very important that you master this particular strategy that I'm going to share with you in this video. Remember, this is pure price action and 90% of my trading strategy relies on price action, right? I use indicators sometimes, right? But whenever I use indicator, I make sure that I also include price action, right? Because price action makes my signal to be highly profitable, right? It makes my signal to be highly reliable. I don't just use only indicators, I include price action alongside with it. Now, what is the function of the Fibonacci retracement? The functions of the Fibonacci retracement is to act as a support and resistance level for you. There are numbers that are automatically plotted on a Fibonacci tool whenever you plot it on a chart, right? So those numbers are the numbers you're supposed to watch, you are expected to be watching, right? And if this number collides with your normal support and resistance level, it gives you a confidence, it gives you confidence that this particular trade will definitely reverse from this particular point. Remember that the Fibonacci retracement works during a trending market, whether in an uptrend or in a downtrend. It works extremely well during a trending market, and that is when you are expected to implement it. So the funny thing about the forex market is that the forex market has different time frame. If you are using candlestick pattern, if you are using candlestick chart, you know that the forex market has different pairs. We have the monthly, we have the weekly, we have the daily, the 4 hour, the 1 hour, the 30 minutes, the 15 minutes, the 5 minutes, and the 1 minute time frame, right? So if you go to the maybe to the daily time frame, you may see that the trend is in a range, and if you go to the weekly time frame, you may see that the trend, there's a trend, maybe uptrend or downtrend. And if you go to the small time frame, it might be in a trend, right? So this is how it is, but you have to understand one thing. You have to always look at the higher picture, right? If you are a day trader, right? Like me, I'm a day trader. You are supposed to be looking at the daily time frame to know how the trade moves during the day, right? So if I want to trade, I may just ignore the weekly and the monthly, right? Because I want to catch the trade today. I will look at the daily time frame because the weekly and the monthly is too far. If I'm thinking of weekly and monthly time frame, I should be looking for swing trading opportunity. But as a day trader and as a scalper, I look at only the daily time frame, the 4-hour and the 1-hour time frame. So these are the time frames that I use to know the direction of the market, right? So if I look at the daily time frame, I will know whether the market is going up or is going down or ranging. And I also look at the 4-hour time frame, the same applicable to the 1-hour time frame. So after that, I will now know what to do. Remember that whenever I trade the forex market, I normally use a particular price action strategy or techniques, which is the MAEE formula. No matter the strategy that I'm using to trade the forex market, be it indicators or whatever, I normally use this formula. So these are the steps that I normally take before I place a trade, and I've been consistent with this particular step, and it has been making me money on a daily basis because I trade every day from Monday to Friday, and I trade only one pair, which is the gold, which is SAUUSD. So right now I'm going to show you an example of how the Fibonacci retracement tool looks like. Now this is how the Fibonacci retracement looks like. Now this is a trendy market. This is currently an uptrend. The market is in an uptrend. So whenever the market is in an uptrend, the market normally makes a higher high and a higher low, right? So your job is to trade in the direction of the trend, but don't trade when the market has gone too high. You should wait for a retracement, right? So the Fibonacci tool helps you to have a sniper entry, right? Because whenever a market is making higher high and higher low, higher high and higher low, it means the market is in an uptrend, right? And you are not expected to buy the highs, because if you buy the highs, the market might make a retracement and trigger your stop loss and you might lose. So you only buy the lows, right? You wait for the price to make a retracement so that you can buy the lows, because the market is clearly in an uptrend. So once you identify the market structure, for instance using the 4-hour time frame or the 1-hour time frame, you are able to identify the market structure and you can confirm that the market is clearly in an uptrend. So what you are waiting for is a retracement, right? So now let's assume this is where the trend started. This is the swing low, right? So what you are going to do is you connect the Fibonacci retracement from the swing low to the swing high. Remember that the swing low and the swing high are points where price reverses. So that is where you are supposed to connect the Fibonacci tool. So for the fact that this is a swing low and this is a swing high, right? Depends, right? Because if you watch, this is also a swing high. This is a swing high, right? This is a swing low, this is a swing low, this is a swing low. So it depends on when you enter the market. Let's say for instance you approach the market here, right? The market has gone to this level and is now making this retracement, and you saw this retracement. You can simply plot out your Fibonacci retracement tool and draw the line from the lows to the high, since it is an uptrend. But if it is a downtrend, you can draw from the highs to the low. But for the fact that it is an uptrend, you can just draw from the lows to the highs. Then I'll wait to see the reaction of the trade to know whether if it will reverse from a particular point of the Fibonacci tool. So remember that the Fibonacci retracement has points where the price can reverse from. So the main essence of this video is for you to have a better confluence, right? So that when the Fibonacci tool, that is the point where the price is supposed to reverse, collides or rhyme with your normal resistance level or support level, then you now have a higher probability trading setup, right? So this is an example of what I'm talking about. So for instance, let's assume that this is the swing high, right? The price got to this new swing high, and you draw your Fibonacci tool from the swing low to the swing high, right? And you now watch the price action. You can now see that the price rallied down and then started ranging at the 38.2 Fibonacci level, telling you that this level is holding onto the price. So what you do now, you connect another line here to confirm if this line actually rhymes with your resistance level, turn support. So if the line rhymes with it, it now gives you a confidence, right? A higher confidence that this price is going to revise from this point, right? So what you do is you can simply go down to the 5-minute time frame. Since this is a 4-hour time frame or 1-hour time frame, you can simply go down to the 5-minute time frame and watch this reaction here, so that you can better time your entry, right? So this is how the Fibonacci retracement tool works. So let's go straight to the live chart. So right now we are the live chart and we are making use of Euro USD. So what I'm going to do is I'm going to remove all these points, right, so that I will start everything from scratch. You understand this very well. Let me remove all these points. All right, now you can see clearly that the chart is empty. We are making use of the 1-hour time frame and we are using Euro USD. So right now, the first thing we have to do right now is to look at the market structure, right? The first thing we have to do is to look at the market structure. So we have to zoom our chart to know the direction of the market, right? To know the direction of the market. So that's the first thing. So once we have identified the market structure, we can now be able to trade in the direction of the trend. So the first thing you have to do is to look at the market structure, right, before you start. And after looking at the market structure, you now identify your area of value. Now we can clearly say that the market structure is a downtrend because the price is making a lower high and a lower low, right? The price is making lower high and lower low, lower high and lower low, lower high and lower low, right? So we can clearly say that the market is in a downtrend, but in a weak downtrend. Not in a strong downtrend, but in a weak downtrend. So we have confirmed that the market is clearly in a downtrend and we are only looking to sell. So if we want to trade this market using the Fibonacci retracement tool, we simply go to the Fibonacci retracement tool and then plot it out, right? So what I'm doing now, it depends on where you meet the market, right? It depends on where you meet the market. Let's assume you met the market somewhere around here. Somewhere around here. This is where you met the market, somewhere around here. And for the fact that the market is in a downtrend doesn't mean you should just place a sell trade, right? Because you know that this is clearly a weak downtrend and the pullback is deep. The pullback is too high, right? Because if you place a sell trade here, definitely you will get stop out, right? So what you are going to do is you are going to plot out your Fibonacci retracement tool from the highs to the low, right? Because if you watch clearly, this is the highs and this is the low, right? So you plot your Fibonacci retracement tool from the highs to the low, right? So that is where you are expected to plot out your Fibonacci retracement tool from the high to the low. So for the fact that this is a downtrend, you can simply connect the Fibonacci retracement tool from the swing high to the swing low, because this is clearly a downtrend. So you can go and plot out your Fibonacci retracement tool, connect the highs to the low and extend it to the right, extend it very well to the right. Good. Now you have connected it to the right. So the next thing you need to do right now is to look for your horizontal line and map out the resistance level, right, for you to be able to know when to enter the market. So this is clearly a support level which we later turn into a resistance level, right? This is a support level which we later turn into a resistance level. Good. So remember, like I told you, a support level is not a line, it is an area in a chart. It's not a line. You have plotted out a resistance line and then you now watch the price action. Now for the fact that this is where you saw the market, right, because the market has already made a strong down move here, because the market has already made a down move to this point, and you now connected the highs to the lows, because this is where you made the market. So you connected the highs to the low, right, and you now draw your resistance line, because this was clearly a support level where price could not break through, right, and then you draw it automatically becomes your new resistance level. because whenever price broke below a support level, it automatically becomes a resistance level. So you have not drawn your support level, and you have drawn your Fibonacci retracement tool. You now watch the price action to know the reaction of the price. Right now, when you watch clearly, you see that the 0.5 is very close to the resistance level, right? The 0.5 is very close to the resistance level, so you should be watching this level, right? Because the 0.5 level, which is this green line, is close to the resistance level, and you should be watching this line, right? So what happened? The price rallied up, because this is where you saw the price at this level before you now map out your retracement to your Fibonacci retracement tool. This is where you saw the price before you map out your Fibonacci retracement tool. So after drawing your resistance line, because it was previously a support level, you can see that the price went down, went up again, went down, went up again, went down before it broke below it, right? The same thing applicable here. The price went down, couldn't break through it, and went up. So this becomes our support level, which if the price breaks below it, it becomes a resistance level. So for the fact that the price has broken below this level, it automatically becomes our resistance level. So we are watching the price as it reacts on the Fibonacci retracement tool and the resistance level. So if you watch clearly, you see that we have two numbers that are very close to the resistance level. We have the 0.5 and the 0.6. So these two Fibonacci numbers are very close to the resistance level, so we should be looking at these two numbers. Remember that you'll be looking at the price action to know where the price is reacting at. So this is the 0.5 and this is the 0.618. So we are looking at these two resistance, and we are looking at these two Fibonacci retracement levels to know what the price will do when it gets to this level. So if you watch clearly, you see that the price went up, passed through the 236 level, then came to the 38 level. It passed through it. Then the price now came to the 0.5 level, right? And the price is very close to the resistance level, right? The price is very close to the resistance level. So if you watch clearly, you will see that we also have another resistance level here, right? So you bring out your tool and map it. We have another resistance level here, right? Because price went down, tested it, right, and then came down. So we have resistance level here. We also have another resistance level here. So we have two resistance level. So this is in form of a channel. So we are watching the reaction of the price in the middle of these two key levels, right? We're watching the action of the price in this level, in the middle of this resistance level, right? Because this is our first resistance level. The price broke below it and then came and tested this level and formed a new resistance level, right? And then went down again. So we have two resistance levels. One is this and the second is this. So what we are doing now, we are watching the price as it reacts on the Fibonacci level, because we cannot say that this 0.618 and 0.5 is a target where traders are looking at, because that is where price will definitely react. Because for the fact that we have two resistance level pointed there, it means that the price is going to react there, right? So once you monitor it and see that the price cannot break through the 0.5, right? Because you can see that the price went up and couldn't break through the 0.5 and started rallying down. So what you will simply do is, since this is a 1 hour time frame and you are a day trader, right, you just want a better risk reward ratio, you can simply go to the lower time frame, like the 5-minute time frame, right, and then watch this level. What you are looking for, you are looking for a candlestick pattern like the bearish engulfing pattern or an inverted hammer, right? You want to see a rejection at the lower time frame, right? So once you see so many rejection, like if you go to the 5-minute time frame and you see so many rejection on this level, then you can confirm that this resistance level is going to hold the price, right? And you can now place your sell trade and maybe put your stop loss above the first resistance level, right? The stop loss should be above here, but if you want a tighter entry, you can place your stop loss. But for your own safety, I will advise you place your stop loss above this second resistance level, because they are very close. Because if the price goes a little bit higher, definitely this second resistance level is going to hold on to the price. So once you have drawn your Fibonacci retracement tool and you have plotted your resistance level, the first resistance level and the second resistance level, because consider the price respected this level before it finally broke below the level, right? And later came back to make a new resistance level here, right? So you have the first one and the second one, right? You can call this a channel, right? A channel, or you can call it a zone. So this is purely a resistance zone, right? So you want to watch the price, the reaction of the price in the middle of this zone, right? So what Fibonacci number is close to this resistance level? We have the 0.618 and the 0.5. So these are the two levels that are very close to the resistance level. So you should be looking at the 0.5 and the 0.618. So for the fact that the price rallied up to the 0.5, right, and couldn't break through it, right, what you will now do is you go to the lower time frame, like the 5-minute time frame. You want to see a rejection at this level, right? You want to see several inverted candlestick pattern or bearish engulfing pattern at the lower time frame. You want to see so many rejection at this level at the lower time frame. So once you head straight to the 5-minute time frame and you see so many rejection at this level, it simply means that this level is holding strong, right? So what you will do is you place a sell trade somewhere here, and then your stop loss will be above the first resistance level, right? Because the price might go up a little bit and then reverse. Because if you place your stop loss a little bit below this first resistance level, the price might go up a little and trigger your stop loss. So your stop loss should be above this resistance level, right? Because once the price gets here, this resistance level is going to push it back. So your stop loss should be above this resistance line, and then you place your sell trade here. So where will be your take profit? Your take profit will be at the previous swing low, which is this, right? So this will be your take profit, right? So once you place your sell trade here, your stop loss will be above this level and your take profit will be at the previous swing low, right? So you see that you have a higher risk reward ratio, because from this point of entry to where you place your stop loss is about, let's say, 20 or 30 pips, right? But if you watch, you see that your take profit is about 200 or 150 pips. You can now see that there is a huge risk reward ratio in this trade, because you are risking lower and you are aiming to gain higher, right? So you can see that the price now rallied up. So you can see that the price now rallied down and smashed your take profit and even went lower again, right? So for the fact that you saw this resistance level, previous support level, now turn resistance level, there are two forming a zone for you, and that gives you a powerful confidence that this 0.618 and 0.5 Fibonacci line becomes a target, right? So you cannot clearly see that this, with this setup, you have a higher confirmation that the price will definitely go in your direction, right? So this is how simple you trade using the Fibonacci retracement tool and support and resistance level. So my advice to you guys is to go to your demo account, backtest this strategy, and then let's see how it works. Make sure you are able to identify an area of value after identifying a market structure, maybe a downtrend or an uptrend. Then you identify an area of value, support or resistance level. Then after that, you cannot draw your Fibonacci retracement tool and make sure that you watch the levels, the Fibonacci levels, to make sure that they rhyme with the resistance level or the support level. So that will give you a powerful confirmation that the trade will respect that level. So ladies and gentlemen, that is all I have for you on today's video. I hope you love this video. If you do, give us a thumbs up. Don't forget to subscribe to this channel for more educative content like this, and also don't forget to turn on the notification icon to be the first to be notified whenever I publish new content. I will see you again in my next update. Bye.